Nitin, hi. Good to have you on the show as always. Just wanted your take on the slew of IPOs that has been seeing off late. Of course, waiting up to Swiggy as well as Hyundai too. That's going to be the big one. But the kind of valuations that they list at and the kind of gains they even make post that, is that any reason to worry?
Well, I think the kind of uh, inflows that our markets are seeing, actually, these kind of the supply of our paper is very, very important and needed. Otherwise, you're sort of driving existing stocks valuations to levels which make people very uncomfortable and which are not sustainable. And the good part about this IPOs coming in is the fact that if you've seen last month, I think finally foreign investors who had largely sat out the last 3 years, if you, I mean, look at the numbers, this has been a domestic driven rally. So they are finally starting to participate very actively in the IPO market. So I think uh, you are going to see more and more of that happen because, and people are going to look to try and sort of, not that these IPOs are coming particularly cheap, but even if it means playing for the listing game, you're going to start seeing that. Now, historical data has shown that when you look at the whole IPO market, over a 1 year period or 2 year period, a lot of them, don't trade anywhere close to the initial listing pop. So I think, over a period of time, we will see that. But I think right now it's a time where everybody wants to participate and and it's good from an Indian market perspective if you're seeing more and more paper coming in.
Let's see whether that entire gush really helps the Indian markets or not. But what's really helping right now is that China's stimulus. In fact, Hang Seng has managed to clock gains of over 10% within a matter of week itself since that announcement came through. And it's been one of the best weeks that index has seen in a long, long time. What are some of those stimulus measures and what exactly will be the impact on the same and how's been the reaction so far? Let me take it across to Ashesha to get more details on this one.
Well, absolutely. A whole host of measures being taken by the Chinese government and Chinese central bank, because of which globally commodities have been rising, and back home in India, Indian metal stocks have also been shining bright. They've gone ahead and cut 1 year policy rate, and this is the first infusion, capital infusion, that Chinese central bank has done into banks since 2008. So that's the kind of policy boost that they are trying to do into the Chinese economy, because of which global commodity prices have also been on a surge. Let's also talk about some of the measures that they've taken. They've gone ahead and lowered 7-day reverse repo rate to about 1.5% from 1.7% earlier. Stock Stabilization Fund will infuse about 113 billion yuan into the economy. 0.5% lower RRR is what they've undertaken in order to infuse about $142 billion. And they've also reduced minimum down payment ratio by about 15, from 25% to 15% for second purchase of homes. The Public Bank of China has also covered state loans for unsold homes. So it was at 60% earlier, and they will now be financing 100% of those purchases. So slew of measures being taken by the Chinese economy. Remember, growth slowdown. China earlier was growing in double digits, which has slowed down to about 5 to 6% in the last 4 to 5 years or so post-COVID. Real estate market has been under pressure. Several real estate players have also declared bankruptcy, which is impacting real estate market and commodity demand globally. Several demographic challenges, rising debt level are some of the reasons why Chinese market, especially the real estate market, which contributes about 60% of China's GDP, has been under pressure for quite some time now. Now let's also understand the impact of the stimulus measures that the Chinese government has taken. So as you mentioned, Chinese index has seen a significant recovery over the last few days or so. Today it is up 4.5%. Chinese index is up nearly 15% this week alone and has recovered nearly 16% from the lows that we saw on the 18th of September. So solid recovery in the Chinese market, and the repercussions of which were felt back home in India on metal stocks. So Nifty Metal Index, the biggest sectoral gainer today and for the week, it is up nearly 7% this week. And we have the likes of Nalco, which is up 13.5%, Vedanta, Tata Steel up nearly 12 to 13 odd percent, SAIL, NMDC, Hindalco, Jindal Stainless. All of these stocks have gained anywhere between 8.5 to 13 odd percent from the lows of the 19th of September. So solid recovery that we have seen in Indian metal stocks on account of a slew of measures that are being taken by the Chinese central bank.
And that's being felt in some of the metal stocks as well. What a move they have seen all through this week. Naresh, you believe that metals is going to be a sustained trend?
So would prefer the aluminium side of it compared to the steel. And it could be a sustained trend because not only are we seeing a recovery in the stocks, but we are seeing a good recovery in the base aluminium prices. Alumina also is doing well. So that augurs well for Hindalco, Nalco, and Vedanta. So any dips going forward, say a dip back to 730, 35 levels on Hindalco, 195 to 202 levels for Nalco, and Vedanta closer to 490 odd levels would be a good entry point if we get a dip. And structurally, the bias remains very positive on all three of them.
Okay, point taken. So that's the take coming in on some of the metal counters. But just shifting focus, Nitin, and talking about the healthcare space as well. Today, UBS has initiated coverage. They're quite sanguine on the likes of Sun Pharma, etc. as well. What's your take within pharma? What's your pecking order within, let's say, the export-oriented names, domestic, hospital, diagnostic?
So I think clearly, if you look at from a long-term structural perspective, the domestic story in the form of healthcare, the hospital segment, clearly looks very exciting. I think the kind of penetration that is required or the bed penetration that we have is yet so low. So I think it is a multi-decade story that we will see playing out as far as hospitals is concerned. I think the likes of the generic pharma business, the large exporters, they're really going to, a lot of them have evolved and they're really going to now sort of act as quasi-defensives. So they have a business which will keep on growing at steady state basis. And as I think, they will be like a part of your core portfolio. But I think a lot of growth is really going to come from domestic pharma.
Okay, so that's a view coming in on domestic pharma, but definitely some of these stocks in focus. What else is passing around? Let's take a look at some of the other movers as well. Naresh, what's happening to Reliance Industries? Is this a big breakout that we should watch out for?
So the first indications of a trend change on Reliance Industries as of now. Today, it has crossed the last 3-4 days highs. In the process where Nifty has made new highs, Reliance was not participating. Then if we go back the last 2 months, 3,080, 3,085, if that crosses, then we get a reversal and a shot at a new all-time high. So a good price action today. It's a buy with a view that it could cross into new all-time highs.
Right, okay, that's that on Reliance. The color for, the large caps, while of course some of the select pharma names are holding out, there's of course BPCL, that's on a tear, 6.5% higher. Anisha just flagged off Reliance, 2% of an uptick coming in there as well. Couple of these auto stocks are not looking bad. Nitin, just wanted to get your sense in because, PVs has languished for about 2 to 3 odd months now. Two-wheelers, of course, the demand goes very steady. Given that we're at the cusp of the festive season, does it seem like PVs could catch up finally?
Well, I think PVs has had a very good run. And I think it's going through that phase where, this was also run led by new models. So if you saw the kind of new models, especially in SUVs that got introduced over the last couple of years, and that's what really driven. This year, has been more like a year of consolidation. We haven't seen the same velocity as far as new models is concerned. I think, but there is a lot of optimism as far as the festival season is concerned. There is a lot of inventory in the pipeline, which is already built in. So I think I don't see the kind of growth that we saw in the last few years come, but clearly the festival season should see some amount of sequential bump up, which should be, which should actually set the direction for the future because the kind of inventory in the pipeline, if it does not get absorbed, could actually have an impact going into the last quarter. So I think this is going to be the festival season, hopefully. Given that we have had bountiful monsoons, inflation is down, should actually do well. And so I think the next couple of months will be good for PVs.
That works out or not, but it's definitely going to be very crucial time for some of these auto companies, because the inventory is high in the system. It might just hint at a downturn if it doesn't get sorted out in terms of the inventory which is there. But hear out what Mr. R.C. Bhargava of Maruti had to say on the festive demand, as well as what exactly is in the works in Karnataka.
You know, every year, of course, the festival season is something to which all car manufacturers look forward to, because that is when there is a massive move towards higher buying. This year, particularly, that excitement about the festive season is there very much so, because, as you rightly said just now, sales in the period from April to now have been quite muted. And all our hopes are centered on the festival season, driving up sales so that this year does not end up flat or with very marginal growth. I can only hope that states will follow what UP has done. And whether it's Karnataka or any other state, we would welcome such steps taken to encourage different forms of technology use and different forms of meeting the energy goals of this country and the net zero goals, because use of different technologies which are better than just petrol or diesel are absolutely essential if we are going to get to our target of net zero and prevent high pollution in the intervening years. I do believe that going forward, a modification and simplification in the tax structure is going to be crucial for giving that extra impetus, which will create the demand, which will then in turn drive investments and manufacturing. I think there are many people in government who have been speaking about the need for rationalization. The issue in India is, of course, that this kind of rationalization requires not only the central government to be convinced of it.
Okay, so that's the latest coming in from Mr. R.C. Bhargava about the festive season, as well as what is expected from Karnataka and whether there could be some sort of push coming in. In the last few minutes, Kalpatru, power has shot up. Actually, we did speak with the management just a little while ago, and we should try and pull up a sound bite, because they were confident of maintaining their growth profile of 20-25%. They were very hopeful of the kind of demand momentum which is there. Plus, that entire national electricity plan is something that should augur well for the company as well as the country. We'll try and play that soundbite, but before that, what's your take, Nitin, as far as the entire power ecosystem is concerned? That national electricity plan coming in, 9 lakh crore getting added to the system?
So I think power is on a roll. There's no two clear ways about it. That if you see what's happening in the power sector, especially as far as solar power is concerned, and the kind of capex plans that are being announced. In fact, if you see a lot of the IPOs that are coming out, they're coming out in this segment of the market. And this time around, it's really happening with large entities who are of size and so on and so forth. So it's the last time around you had this phenomena where you had new players entering into the segment and having standalone plants, and then when demand slowed down or some of them had raw material issues, you had this whole cycle of bad debts take place. So I think power and the power demand over the next 5 years is only going to go up dramatically. I think we won't be surprised if the entire ecosystem, starting from utilities to equipment manufacturers to engineering and capital goods companies, participate and do well.
This plan is, there's always been a lot of capacity addition that has happened over the last 10 years in the country. But, to have a articulated plan which talks about the next 10 years in a very progressive and futuristic way, from the viewpoint of grid reliability, access 24/7, a very efficient system of generation to transmission all the way from, pit to plug. I think this policy is really something which, in my opinion, path-breaking for the entire country from a demand standpoint in the next 8 to 10 years. So, I think I wouldn't like to go so much into the future. We've had a good run over the last couple of years, and you're right about 20-25% as a CAGR over the last couple of years that we've grown at. As we grow further, 20% even at these levels is very large numbers considering the scale of our organization. And I think we would like to be conservative and take execution more seriously, and ensure that we deliver projects in a timely manner at the margins that everybody expects us to deliver at, rather than just have pure top line chase.
Okay, that's the word coming in from the Kalpatru Projects Management. Just take a look at oil and gas. That, of course, continues to be the strongest story, led by BPCL as well as Reliance. Both those stocks holding out very well. Today, some of those chemical names as well are not looking bad. Fertilizer and chemical, that is. So, Deepak Nitrite, Chambal Fertilizers, Coromandel, UPL, all of them are going pretty strong, along with, of course, PI Industries as well added in that pack. Other than that, for the index, we're still just about very, very quiet. 26,354 on the index, about a minute 45 odd point uptick that we continue to sit on. But Naresh, any BTST strategies?
So that would be a buy on Reliance Industries itself, which has seen a tick right now. Stop loss at 3,015, target price of 3,100. Second is a buy on Can Bank, which has seen some volume jump up right now. Strict stop loss at 111, target price of 108.
Kunal, what about you?
That will be a buy on Chambal Fertilizers. The stock finally coming out of a breakout of a major multi-week, multi-month consolidation. So the target of 555, would recommend a buy with a stop loss at 515. And Bank of Baroda could be a breakout candidate. The stock has come back above its 50-day moving average, breaking past about the 248 mark. So would look out for targets of 260, stop loss at 243.
Point taken. Actually, some of these candidates for which we are seeing sudden reactions might also be part of that NSE rejig, but nonetheless, pull up a Sundaram Finance. That one is moving quite smartly. Brigade Enterprises was fairly volatile. It suddenly shot up 7-8%. Now it's cooled off a bit. And on the losing side as well, there are many names which are coming on the list. For instance, a Macrotech developer has taken a knock of 7%. JSW Energy is down 6%. Home First Finance is down a solid 8% right now. PTM, Honasa Consumer, and even Mahindra Lifespace for that matter has suddenly taken a bit of a knock. Kunal, these dips that you are seeing on select real estate names, Macrotech, Mahindra Lifespace, some of the other names as well that we talked about, even from power sector, JSW Energy, etc. Would you buy the dip?
Yeah, I think I'll recommend a buy on dips at current levels, because my sense is that the real estate stocks and the indices are coming back after 3-4 months of price correction. Some of them had corrected by a tune of 15%, 10%, some of them even 20%, the high beta ones. And what we've seen right now is a classic phase of mean reversion completed and the sector making a comeback in terms of momentum. So when a market gets back into its risk appetite mode, generally these are the kind of stocks and sectors which tend to see a follow through up move on a week on week basis. So today could be an off day for the real estate stocks as well as for a few of the other sectors, but I believe that this could be a strong trend in the making. So buying this dip could be a good strategy.
Right. Nitin, the consensus on the street seems to be private banks, right? Because they are the ones which haven't moved, although moved selectively, I should say. Is the bottom-up story within private banks the pocket to bet on right now?
Well, bottom up has always paid through, over any market cycle, correct? But if you look at the larger private bank story, there are two things that have played out here, right? And the markets really out here are playing a rotational game among sectors. And for a very long time, these banks have been out of favor. Also led by the fact that due to over ownership among the FPI pack, and because the FPIs have largely sold down, we've seen valuations correct. And the cycle has also turned, with the rate cut cycle going to impact their NIM margin. So there's been all of that built into this. I think the worst from pricing perspective is built in. So if today you're looking to invest from a valuation perspective, they're trading to close to, while the market is at all-time highs, the absolute valuation of these banks is nowhere close to what they have always traded at. So I think the market is ready to take a contrarian view, and I would believe that once we see the first few rate hikes takes place, that probably the whole sector would have bottomed out and is now looking, from ahead from there. So I think by and large, the private bank trade is there to play, and within that, you could see a divergence in terms of performance led by bottom up.
Point taken. That's a view coming in. Just marking some more buzzers. Take a look at Phoenix Mills. Has shot up quite a bit. Oil India is also coming up on my radar on account of a bit of an uptick. Ajanta Pharma is the other one, and all of these stocks will come up for you on the screen because quite a few of them are seeing sudden moves. As I said, partly could be on account of some of the flows adjustments also. On the losing side, let's pull up PVR. Is there a bit of a disappointment there and a bit of a slip, because that's what the stock is suggesting to me. Yes, down about 3.5%. You have PTM, Honasa, JSW Energy, even Home First Finance for that matter. A lot of these stocks coming under pressure at the moment. Naresh, any specific stock ideas that are coming up on your radar, because there's a lot of volatility in the last 20-30 minutes, individual names?
So I would look at a contra bet on, say, some of the banking names which have seen outflows. So something like Bandhan Bank, which has come down. You have RBL Bank, which is at the lower end of the range. So that would be a contra buy, and maybe a sell on something like a Trent and a BEL, going contra to the flows today.
Kunal, on the other hand, I recall you mentioning in the morning that the distinct factor in this market is the fact that volatility has come down and the VIX has seen quite a bit of cool off. Reiterate for us whether that seems like a continual trend.
Yeah, it seems like a continual trend because over the last 1 month, 1.5 months from August mid, I think except for that first week of August where there was a heightened volatility, post that we've actually seen the India VIX trading below the 50 and the 200 moving averages, and that too for a sustained period of time. Now, the good part is that we are still not down to that range of 10 or 9.5 for the India VIX, because that generally becomes a more frothy territory for the markets when the India VIX drops down to a single digit. Interestingly, what we've also seen that the India VIX is remaining to a range of 11.5 towards 13 to 13.5. So even at a point when the Fed meet was due for the markets, that time also the India VIX had not shot up significantly, which means the markets were not anticipating any major kind of a volatility. Even at current levels, with the India VIX still at 11.5 odd mark, I think still indicates that the markets are not indicative of any kind of an immediate or near-term volatility. So I think that's a positive sign for the index, which means traders can hold on to their long positions, with select kind of a trailing stop losses and continue to ride the trend on the upside.
Continue to ride the trend on the upside. Thanks, Kunal, for that. In fact, we'll let you go on that note. Naresh as well as Nitin, thanks so much for being with us today and helping us wade through the volatility that we have seen in the last 1 hour.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.